Something big is happening behind the scenes, and retail investors are being pushed further to the sidelines once more. The latest move by the SEC has given powerful institutions even more time to hide what could be billions in synthetic shares, and it's all happening under the radar. If you thought the 2021 AMC drama was behind us, think again. The manipulation never stopped, it just evolved. Let's break this down. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But everyone, remember this is not a financial advice video. Recently, the Securities and Exchange Commission announced that the implementation date for a crucial transparency rule, originally planned for December 31st, 2025, has now been extended to June 30th, 2026. The reasoning? SEC Chair Gary Gensler claimed that unrealistic timelines were no longer acceptable, and broker-dealers needed more time to calculate daily data under Rule 15c. But let's be honest. What this really means is that the same entities responsible for market manipulation have been handed another year to continue business as usual, unchecked. Retail investors were promised clarity, we were promised fairness, but just like with margin rules and audit trails, we're seeing the same pattern: delay, delay, delay. This isn't the first time either. Over the past year, numerous rules intended to expose shady practices and increase transparency in trading have mysteriously been postponed. It's as if every regulation that could potentially expose malpractice is being shoved further down the road. And now, with this new delay, it's become crystal clear. They are protecting the institutions, not the investors. According to financial commentator Kristen Shaughnessy, broker-dealers have pushed hard for a year-long delay before they have to report trades to the Consolidated Audit Trail, or CAT. What's the CAT? It's a system designed to track every trade, yes, every single one, to ensure visibility across brokers, hedge funds, and market participants. In plain terms, it's a tool to expose manipulation. So if they're scared of it, ask yourself, what don't they want us to see? For perspective, the CAT system caught over 7 billion trade discrepancies in just one day. Let that sink in. These aren't minor errors. This is evidence that the entire trading structure may be riddled with problems. And now, the very people who don't want those errors exposed are getting more time to keep them hidden. It's like giving a thief an extra year to clean up the crime scene before the police show up. The truth is, many of these institutions have placed bets they can't afford to lose. They've taken short positions that have grown into monsters. Covering those shorts would cost them dearly, possibly even lead to bankruptcy for some. And instead of owning up to it, they're doing everything they can to hide their tracks. Every time a new rule threatens to shine light on their moves, it gets pushed back. Think about this. These are institutions controlling hundreds of billions, even trillions of dollars. If the full scope of synthetic shares and short selling were to be revealed, it could collapse entire portfolios. That's why this situation is so volatile. When we talk about the squeeze potential for AMC and GME, we're not just talking about some meme hype. We're talking about a financial time bomb that the big players are terrified of. And their fear is starting to show. Recently, Fidelity was caught disabling the buy option for GNS shares, allowing only sells. Sound familiar? That's exactly what happened with AMC and GME in 2021. Limiting buys forces price drops and gives shorts more time to wiggle out. And now it's happening again, this time with a smaller cap stock. But it proves a point. This isn't over. They're still using the same tactics and getting away with it. Now, if you look at how brokerages behave toward transparency, it makes sense. They don't want high visibility. They want control. They're not worried about us, the retail investors. They're worried about what happens when we know what they've been doing. According to market analysis shared by Travis, we're seeing something interesting. There's heavy volume to the upside, meaning buyers are active and aggressive, while downside volume is weak. That kind of behavior often indicates that algorithms aren't exiting. It's not a panic sell. In fact, it could be institutions quietly taking long positions and preparing for a squeeze. Some institutions may finally be on our side. They know a short squeeze would create an explosion in price, and they want in. These players can manipulate just as well as the short side. If they flip and join the longs, things could get chaotic, in a good way for retail. But don't be fooled. Even though some may align with us temporarily, the system still wants to avoid retail making life-changing money. That's why they'll keep blocking us whenever they can. Let's go deeper. What happens if institutions start selling to each other instead of to retail holders? The squeeze may happen, but the gains might never reach us. That's the game they're playing. Let the squeeze occur only after retail has exited the position. It's a rigged setup, and that's why retail holding strong is the biggest threat to the system. Take a look at AMC's off-exchange volume, the amount of shares traded in hidden dark pools. This is where much of the price manipulation happens. Trades are executed out of public view, suppressing the real price and preventing true price discovery. If we could actually see the full picture, and if all trades were forced onto lit exchanges, AMC's price would likely be much higher than what we see now. Back to the CAT system. This technology exposes those dark secrets. The billions of errors it catches are not innocent mistakes. They are signs of a deeply broken, possibly criminal system. And again, what does the SEC do? Delay its implementation. What does Wall Street do? Lobby for more time. Why? Because exposure equals accountability. Investor Robert M. recently reflected that it's been nearly 5 years since he first got involved in this movement. Like many other retail investors, he hasn't lost faith, and that's significant. It shows that there is still a huge portion of people who know what they're holding and why. They understand that when shorts are forced to cover, the value of their shares will skyrocket. And guess what? These aren't shares they stumbled upon. They're shares they chose, shares that could be tied to synthetic versions created through naked short selling. Let's talk briefly about how the squeeze could actually play out. According to another post by Travis, it's pretty straightforward. Market makers who originally sold short to retail investors may be forced into liquidation by their prime brokers. That means the prime broker has to go into the market and buy back those shares at any price to close the position. There's no negotiation. No, let's get it at a discount. It becomes a market buy order that eats through the ask, no matter what the price is. Now, the prime brokers are no small fish. These are the institutions that provided the capital for all this shorting in the first place. If they're forced to act, it means the financial chain reaction has already started. And when they have no choice but to buy, that's when we see the true squeeze. Because if they don't just lose money, they risk going under entirely. And don't forget, behind those prime brokers are pension funds, endowments, and other large-scale capital pools. If they lose, the whole structure trembles. That's why the system is doing everything it can to prevent this event. Because when it comes, it won't just shake Wall Street. It will be an earthquake across the financial world. And who benefits most? Retail, the average investor who saw the truth before anyone else did. The people who bought and held despite the manipulation. The people who own both the legitimate and the synthetic shares. That's who stands to gain, and that's who the system fears most. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.